You're listening to The Whole Truth, a Resources Rising Stars podcast.
Investor appetite for gold stocks is still strong, but there's not that many to choose from, particularly if you're looking for a near-term producer around the 100,000 ounce a year style. If you also want one in Australia, that list of potential candidates is even shorter. Rox Resources has put its hand up to join those few companies that meet that criteria. Managing Director Rob Ryan says that the company's Youanmi Gold Project in Western Australia is on track to produce 100,000 ounces a year. Youanmi is a classic, old, very well established gold system in WA, a bit along the likes of the Gwalias of the world that are now doing so well for investors. It's been around a long time, but as Rob says today, there is more ounces in the resource category at Youanmi today than the project has produced. And that's saying a lot, considering the project was first in production as early as 1895. Just to put that in context, Queen Victoria was still on the throne. That's quite some history, but there's still plenty of gold to come out of it. The PFS put out this week shows that the company is on track to produce 100,000 ounces a year at an all-in sustaining cost of less than $1,700 an ounce. Rob says plenty of drilling to come over the next few months to grow that inventory, with the aim of trying to get it up to a 10-year mine life in parallel with doing the work on a DFS. Rob gives us a very frank assessment of the project, why it's economically robust, and why he thinks the company can unlock value with the drill bit over the next 6 to 12 months. So Rob, it's all about you and me and you and me. That's been the story of the week, hasn't it? You and me.
It has been.
And tell me about the study. I think our listeners would be very keen to know. They've been following this project for some time. There's no doubt there's an appetite for gold in Western Australia. The market is not easy, but if there's interest in anything, it's gold in Western Australia, and you're on the front and centre of it. What does the study you put out today show?
Well, the Youanmi pre-feasibility study really does set a baseline for what we look to develop as the Youanmi Gold Project. It's about 100,000 ounces per annum at a very low all-in sustaining cost that'll produce gold doré on site. And the expectation is through increased amount of drilling, they will look to build on that base and continue to increase that production target, as well as adding more ounces into that mining reserve.
Now, Youanmi, apart from the play on the name, is a very old name. I remember writing about Youanmi as a journalist many years ago. It's one of those projects or deposits, gold systems that have been around a very long time. What's the background to Youanmi?
So the background to Youanmi was it was found in 1894. A bit of conjecture was at 94 or 95. But there was a few different mining campaigns, obviously in the early 1900s, and then again in the mid sort of 1900s, around that 30s and 40s range. And then it was EastMet back in the mid-90s that started open pit mining. Eventually, Gold Mines of Australia went underground at Youanmi. And they mined a very small scale, about 200,000 tonne per annum, up until about 1997, when the gold price sort of dropped to about $450 an ounce Australian. And with that challenging market, they sold off the assets, and it's been sitting dormant ever since.
It's a classic example of one of the great gold systems, isn't it? I mean, you look at things like Gwalia comes to mind, that Raleigh Finlayson's really starting to kick some goals with at Genesis. These systems, these projects have been around a long time, but with modern technology, a higher gold price, they really do live to fight another day. And Youanmi is one of those examples, isn't it? It's probably not in many ways dissimilar to Gwalia.
100%. And this is a massive gold system. We've got 2.3 million ounces at 4.5 grams defined here. There's already been 700,000 ounces mined out of the project in the past. And it's still got the potential to grow. There's areas where there was previous underground workings that are going at 30 grams a tonne that there's been no drilling under. So this is an exceptional opportunity for us to continue to drill out this asset and build upon what the pre-feasibility sets as the base case scenario of this operation.
Look, taking these classic high-grade old gold systems has proved to be quite a lucrative undertaking in recent times, as I mentioned, underpinned by the gold price, obviously, and new technology. But in this case, Youanmi is sort of slightly late coming to the party in many ways, But what you just said then is that there's more in the resource category now than has been mined from there in the past.
Correct.
So that would suggest that, in fact, the best days are certainly not behind it.
No, and I think the best days are only ahead as well. I think when you look at it in the past, they've probably gone for a much smaller scale mining scenario, even in the mid-90s. And actually looking at it, utilising modern mining techniques and, standard Eastern Goldfields underground mining, you'll be able to get production rates up around, 750,000 tonne per annum, even potentially up to 1 million tonne per annum if we've got the resource in there to back it.
Now, you've been working on this for a while. You've been exploring this for what, two or 3 years now? Mm-hmm. And you've built up this resource. So you put out the pre-feasibility study this week. You're showing that the thing has capable of producing circa 100,000 ounces a year. Mm-hmm. There's not a lot of sort of near-term producers in that space, is there? Barry Fitzgerald, who I know is well known to our listeners, writes for Resources Rising Stars, among other things, one of the great resources writers in Australia. He was making the point in his latest column that near-term producers of that sort of magnitude are few and far between. Investors can be looking for exposure to the gold price. They like the gold space at the moment, but trying to find new producers of that order isn't easy, partly, I suppose, because the gold price has not been great until more recent times, and there's been a lack of investment in exploration and development. But there's few options for investors, as Barry pointed out. At 100,000 ounces a year, you're one of a rather select club, particularly given that your project is in Western Australia. Correct.
And I think probably one of the only things that you look at is in that greenfields development, there's probably only been a couple of assets, De Grey as one, that have really been found over the last few years. Now, Youanmi has missed, it's sat in a lot of private hands, and it's missed those development cycles, those reinvestment cycles, as you would put it. You've had assets that were previously, for instance, Spartan now, but previously Gascoyne, had the Dalgaranga project that was mined by Equinox, and, that was in the mid-90s, and then it went up, and there was that second phase of investment. So Youanmi missed all that, that second round of investing, and now it's well positioned to take advantage of what is a much higher gold price than what it was mined in the mid-90s. We're talking, it's $3,000 an ounce higher than what it was in the mid-90s. And the ability there is to really utilise the infrastructure. It's all on mining tenements. It's got tailings dams. It's got mining approvals already in place. So there's no major issues in getting this into production. It's about defining the asset, setting that base load, which is the PFS, and then taking it forward from here.
Now, 100,000 ounces a year is seen to be the sort of threshold to make a project bankable, mm-hmm. fundable these days. Is that a fair comment?
That'd be fair comment.
Yeah, and you've got a 7.5 year life. So I suppose the question is, how do you get that life over the next sort of 18 months or so, get that life to the magic 10 years at 100,000 ounces? Mm-hmm.
And I think there's a lot of ability to be able to do that with some shallow drilling. So as I sort of mentioned before, we've got 3 main mining areas. We've got the Youanmi Main, which sits in a central corridor. It's defined down to about 900 metres of depth. We've got Link that sits to the north of Main. It's defined to about 600 metres of depth and still open. And then we've got Pollard to the south, which is only defined to about 150 metres, and it's open with no drilling. So here we have an opportunity, especially in around that southern area of the mine, to be able to build out that resource and be able to add additional ounces. And that has the potential not only add ounces to the mine life, but add ounces to the production profile. Also, further to the south is we have what was discovered last year, which was Paddy's Lode. Now, that sits probably about 600, 700 metres away from the current Youanmi underground mine. Now, it's very close to Pollard. There's a 300-metre corridor between those two projects that just hasn't been drilled, and we'll look to put some holes in there in the coming months to really look to see if we can start linking up that whole system, because that would present an immense opportunity to increase the mine life at Youanmi.
Now, the PFS establishes that the project is viable as it stands. As I said, 7.5 years at circa 100,000 ounces, gives you a payback period from memory of about 3 odd years. So pretty good payback. and certainly a robust project economically. What does the next 12 months hold, though, in terms of, you mentioned the exploration potential. Obviously, you start work on some more sophisticated DFS level studies?
Yes, and the big thing is we'll continue drilling as well. So we've got that Pollard area, as I said, a very high-grade area where previous underground mining was going at sort of 30 grams plus a tonne. And we'll look to put some holes in and around that area to build that out. We do have a small amount of mining inventory in there that is inferred, that comes in at the back end of mine life. Now, there is the potential that if we get an increased amount of drilling through that area, and the grade is much higher, it is shallower, it will be cheaper ounces, and that has the ability to come into the front end of the mine plan as well.
So do you envisage that the final DFS you put on the table, Rob, would have quite significantly different parameters in terms of the reserve, the resource, maybe even the production rate, mine life sort of thing?
Yes, there's huge potential to upscale the project from here. I think what we've done is we've put out what I believe is to be a conservative sort of PFS estimate. We've priced things...
A base case, if you like.
A base case. Yeah. And look, we've priced things at the top of the cycle as well. When I'm looking at power costs, for instance, we've been utilising 28 cents a kilowatt hour for what is the 30% renewable target in there. Whereas, I've looked at some pre-feasibility studies and scoping studies that they're rating things at 15 to 17 cents a kilowatt hour. So I think there's a lot of potential for us to, as conditions normalise in the market, continue to make more money. But the all-in sustaining cost is sitting at $1,600 an ounce anyway, so they're cheap ounces.
They are, and if you look at some of the costs out there, I think Northern Star talked about guidance for FY25. 1850, 1860 of that sort of order. I mean, and that's not uncommon these days. Obviously, given the gold price, that's a whopping margin. But, you're coming in even below some of those. So the thing is obviously very robust as it stands. But what do the next 12 months hold, Rob? You've only got a market cap of $50-odd million, haven't you? So there must be plenty of upside here. People would look at this and say, well, if you can do 100,000 ounces a year, why is the market cap only $50 million? So what can you do over the next 12 months to sort of unlock that value?
And unlocking that value will come through the drill bit. I think people will like to see, what the potential of this project could be, because 100,000 ounces per annum is just a start. And the more we drill out this southern area, it opens up a really big portfolio of ground that just hasn't been tested below 100 metres.
So how much have you set aside money-wise, metres-wise? Listeners would say, that's great, Rob. Obviously, there's some low-hanging fruit there and you can create money. Tell me what's going to happen over the next 3 to 6 months in terms of the drill bit.
So we'll kick off a 10,000-metre RC and diamond program from about mid-August. That'll commence, probably go for about 6 to 8 weeks. That's the phase 1 program. We'll review that phase, and obviously that's targeting a lot of that area around Pollard and Paddy's, the shallow, high-grade ounces, and we'll look to get those into the resource, and then we'll go through a phase 2 program shortly after then.
Right, and obviously generating the news flow, that drilling is aimed at growing the known mineralisation, ultimately.
The known mineralisation, as well as converting a lot of those inferred ounces in the mine plan into indicated.
So you can bring it into your mine life and ultimately review whether, in fact, 100,000 ounces is your right rate, and certainly try and maybe hit that magic 10-year mine life barrier that investors so love. What do you think about the market and its response to not just a study but it's just gold news generally? It's not easy. Do you think there's, for those looking for bargains, this is a good time, or are we catching a falling knife? Oh, excellent.
I actually think this time is probably the best time for investors to be looking at the junior end of the market. You will see that M&A activity is really starting to pick up. We've seen with Spartan over the past few weeks with the Ramilius taking a cornerstone stake in those guys. There doesn't seem to be a lot of good projects out there that have the scale of, and especially the grade of what we have at Youanmi. And that does really open up a lot of opportunity, whether it be M&A or whether it be the project development aspect. I think this is a bargain price to be investing.
Yeah, certainly there's a view out there in some circles that the interest rate outlook in the US could give the gold stocks a bit of a tailwind. And yes, you might need a little bit of patience. It's not playing out perhaps as fast as some had hoped or thought, but there is some bit of a tailwind coming on that front. So the companies that are making their own action could enjoy a good 6 to 12 months.
Yeah, and I think over the next 6 to 12 months, we'll have an increased amount of news flow coming out as we continue to drill and explore our tenure. So it's not just about infilling for the DFS. It is about sort of looking to grow that resource at the same time and add more ounces into that mine plan.
And give investors another opportunity to find a 100,000 ounce near-term producer.
Hopefully more.
Rob, thanks very much for your time.
Thank you, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.